Good evening, this is Giuseppe Basile. I'm the analyst and trader you can find at the blog FibonacciStalking.com. I regularly post on Twitter using the @FibStalker nickname. Good evening, today is November the 12th, 2012, and it's 20 to 6 p.m. Italian time. I want to remind you that Italian time is time zone is GMT +1. In this video I want to do a review of the SP500 E-mini futures contract, and particularly I'd like to study the sequence of measured moves in this future contract and try to establish some important levels that we can use to understand whether we are going to see further weakness in the SP500 and potentially a divergence between the euro and the SP500 index, or whether what we saw in the last few weeks was only a mild correction, and so we are preparing for a bigger push higher in the indices. In order to establish this, I'd like to start from the weekly chart. What you see on the screen is the weekly chart of the mini SP500 because continuous contract aligned to the December expiration, and you will remember that the first intervention of the central bank, the Fed, in the United States in order to avoid a disaster in 2008 and 2009 came in March 2009, and we had the first intervention. We had this measured move. We had a price getting very close to the 583 target, and we got to, as you remember, to the 589.50. You have to consider this is a continuous contract, so price are skewed. I think it was the 650 area in the contract, March 2009 contract. Anyway, as you can see here, with price violating on the upside the 866 level, we actually decreed the end of this move lower and the beginning of the move higher. Now the SP500 started immediately trading in extensions, and with time there was one level, there has been one level that has been very important, an anchor that has been very important, and this anchor is provided by this level, and the level is the 794 area, 790 area. As we can see, this first row provided support in the 978 area for the SP500, and it reached the first target in 124,248.50 area here, and again this level 790 provided support again at the end of 2011, and as we can see in 1065 we found the next level of support. The 61% line was never violated, and it's interesting to notice that the first target was really close to the highs we had this year, and that was in the 1460 area. And so as we can see, then this 790 area acted as a meaningful anchor for program trading so far. So we're going to trace the next traditional here, and what we can expect is that if this move lower continues, then we should see price reaching the 1130 area, and that's where, according to the pattern that the proper trading is following, this is where we should find support. Let's move to the daily chart and let's see what we have in the daily chart. You will remember from the past analysis of the S&P500 that we sorry, it's a bit slow. So we had this measure move lower, and I'm considering 1,394 because I'm not considering the sandy lows, which are the lows of the October the 30th. So as we can see, we had this resistance area in 1,430 area, and we hit target in 1,377 area, and price actually kept moving lower as well. So on the other side, we can notice that we did not have support just yet. Price was not able to reach the 1,360 area where we expect support and we expect participation on the upside. So if price will not find support in the 1,358 area and down to the 1,330 area, then we can expect the 1,130 target to trade. Okay, so the next resistance level for the S&P500 can be identified. Actually, two resistance levels can be identified on two different time frames. On the 4-hour time frames, and not visible clearly on the daily chart, we have this extension short in the 1,390 area, and price could then reach this level and then continue lower. And as you can see, the first target of this extension is 1,350, and the second will be very close to the violation of this area of support. So if this 1,390 area trades, it's a short trade, and we have the potential of breaking this support level, in which case the 1,130 area would be confirmed. There is another level of resistance, and this would be the traditional from the highs we have traded so far, and again price could go up to this level and then resume selling, and again this would actually break this level, this support area. One important thing to notice is that as for things are now, so based on the lows in 1,364 level, if should price move above the 1,405 level, we would actually violate the sequence on the daily chart, the sequence lower on the daily chart, and this would be for me enough to state that we can resume a move higher in the S&P500. This does not mean that we could not test again the 1,360 area. So there are a few scenarios here to keep in mind, and maybe tomorrow I will publish a trading plan for the ES as well. But it's very important to remember this, to keep in mind this level 1,405. Above this level we can actually resume and move higher. So in which case the SP500 and the euro dollar will start moving in the same direction. We wouldn't have divergence between currencies and the S&P 500, and we could then, as said, resume and move higher in the stock indices as well. I hope this review is interesting. I will publish the plan tomorrow, and I will give an update during the midweek update I publish usually on Wednesdays, only to subscribers of my newsletter. So if you want to receive the midweek update for the SP500 as well, just go to my website, and on the left side you'll find a picture, and you can click and subscribe to my newsletter. I wish you a very good evening. Thank you for your attention. I look forward to see you on my blog, and bye bye.